Secrets, the channel for learning about trading and investing. Welcome to Quick Stock Market Wrap Up. We basically look at the technical charts and then try to understand what happened in the market and then plan for a better trade for the next day. That's Tuesday, February 6th, tomorrow, 2024. So we had a market that faced resistance and then closing bearish, and looks like the market is consolidating. Let's try to find out how. This is a quick wrap up. The Fyers data has not come in for today. We'll check that in the mid of the presentation. You can take a screenshot if you want, but let's look at the charts first and come back here. Here we go. This is what we are talking about. Look at this candlestick of the Nifty. Daily charts we are seeing clearly wide range bearish candle. Remember, we had an inverted hammer which hit an all-time high, and every time there is an inverted hammer at the top of a rally, it could potentially be a reversal in the short term if the price moves below the low of the candle, and that's happened today. So there could be more down move towards the 20 exponential moving average is what we'll have to figure out from the candlesticks. But it's intraday what happened if you look at, you can see that it was a range bound mostly, but in the afternoon big sell-off happened probably in the Reliance, which is falling the most today, 1% or 1.5% or something. So this range bound move unable to move further up after facing resistance at close to the all-time highs. That's even before that, it's 22,000 near to that. It faced resistance and was unable to move, then it crashed in the afternoon with big fall, sharp fall basically. So that's what happened. Otherwise, if you look, if you see that it has hit the top of the channel, then retraced for 1.5%, and then almost fully recovered that the previous day, and that today it seems to be weakish and falling back to that consolidation zone from where it broke out post the budget day to hit all-time high. So it looks like it is falling back to that square box. Yes, so it's probably a small consolidation before it gets enough energy to break out. That's what we'll have to assume, because 20 exponential moving average is intact and we're still very close to the all-time highs. And Nifty candlesticks, if you see, it's bearish. It was red and bearish close below the 20 and the 50 exponential moving average the other day, and it further went down after the low of the candle was breached. So it found support and did a small bounce at close to the 100 exponential moving average. That seems to be giving some support. But if you look at the channels, you can see that it is also fallen down to the low of the blue, into which it had climbed, and in fact started moving up in the blue top. The channel's top, but it seems to have stopped there, taken a support of the trend line of the blue channel itself exactly. And if it falls back below that, it would mean that it is heading towards a retest of the 22 of the 200 exponential moving average, probably, if that happens. Otherwise, right immediate there you have the resistances of the 20 exponential moving average, and it has to come out of this box and move about 45,500, 45,200 at least, in order that we can hope that it would be moving further up. Right now, basically it's consolidating. If you look at the Bollinger Bands, you can see that it is contracting, but with since the price is still far away from the bottom of the band, it could be very volatile. It could go as low as the 200 exponential moving average before it starts expanding on downside if it goes. Otherwise, it's turned from expansion to contraction, which indicates sideways move on Bank Nifty, and the same Nifty. Absolute contraction here on the Nifty, which indicates small Bollinger Bands. The band height is also less, small trending maybe less here as compared to Nifty, but it is consolidation or sideways movement indicated by the Bollinger Bands. Now, if you look at the levels, the first resistance obviously would be the 22,000, a big rounding number, and after that 22, 126, 27 all-time highs, and then up towards the 22,500. Every hundreds would have resistances. So the first support will come in at 21,600, which is 20 exponential moving average. After that, you can find some at 21,350, then 21. The bottom of that 21,200 can 150 can have some swing low. Support can come in there if that is breached. The first 21,000 rounding number, and 2950 has got a gap also. So that would be the very bottom of that channel also, the new one. So these are the levels on the downside, but it is for that much better, a very bullish stage in the case as compared to the Nifty. Nifty is very strong. Small sell off or profit book might have happened. Some of this stocks like Reliance is what I would believe. But banks remain weak, and HDFC also fell today for having big fall of the previous weeks. If you look at this, you'll understand it better. Advanced declines. If you see the Nifty, it's taking some time. So yeah, so we'll be studying that in the upcoming slide. So let's just look at the slide. So market has went weak. Look at face resistance. Close negative. 82 points down. Less than 21,800. And it's a wide range bearish candle that is formed in Nifty. So full recovery happened after a 4.5% retracement at least. It's completely recovered that, and it managed to close above the 20-day MA. And remember, we did this correction and all these up and down movements after 31% of rally from the very bottom, 16% from the last one by itself. So it's a very reasonable correction and good recovery. 50 remains to be at the very top, but just that it turned weak today because of some sell-off, the profit booking. And Nifty, it went weak. It was already weak. It went further weak today. Could not close about that the 20 or the 50 exponential moving averages, and then the bearish candle with a 145 points lost. FIS, so intraday price action we have seen already. We're not going there. Resistance levels also we have seen. So FIS were bias of less than 100 crores last week, but not sure what has happened today. That does not come in, but it must have been either big profit booking sell off by the domestic institutions, or FIS turned bearish once again. Either of that. We'll have to wait for the data, but domestic institutions has been buying a lot since last several days or weeks, so they might have done some profit booking, or it was FIS who continued to sell off. But they have been selling 5,000 crores in the cash market since last there. So several days they're sellers, big sellers. So these 2 weeks they're sellers, I think. They had small buyings of 100 crores, 2,000 crores like that in between. But other than that, it was mostly selling. So it may be that they turned out to be sellers, or even more aggressive after the hawkish Fed outcome. They might have turned more bearish, or both of them might have done some profit booking. You never know. We'll have to wait for the data to come. So VIX is short up anyway. Look at this one. VIX is short up natural. It is 15.6. So be cautious. It could go up to 20, and then we have to be extremely cautious. It is above the low vol regime, getting into the medium vol regime probably. It's getting out of the low vol regime, getting into high vol regime basically. So you have to be cautious about that. Only the main study we have done. So basically the market has lost some of the momentum that it gained the other day, or the 2 days back. Yeah, trend rate is somehow maintaining the rule. So because what had happened yesterday, it's maintaining that. Gains have blown up, the momentum is lost. Nifty is weak, we've done more correction. So Nifty is facing resistance, we already seen. So we'll be cautious if the Nifty is further breaking down, or is it able to consolidate at least. It's all we have to keep a close watch on. Because sectors, if you see, it's all green except the IT and FMCG. The short term, if you see, all are bullish except the FMCG, all sectors are bullish in the short term, actually in the medium term also. Industry heavyweight will contribute maximum to the index, and see it's red. Except the TCS, everything is red today. So Lions are big sell-off. Lions, Infineon, TCS, they are the stocks that are maintaining the bullish momentum in the daily charts that we see. Even though there is sell-off that's happening in the Lions today. So those are all maintaining. Other major heavyweights are all maintaining sellers. HDFC and ITC in bears also. So we have again a mixed pack. Two big shorts getting in the bearish momentum remaining there. HDFC and ITC. Couple of them are on the sideways, and 2-3 of them, the IT stocks and the Lions, is only there to in the bullish momentum. So we have a mixed bag. That's a cue that you get from the heavyweights. Now US indices are green, back to green. So they have been doing non-stop rally. Some retracement came in, some red came in, some sell-off came in, but otherwise it was heading higher and higher to all-time highs. So that's a good thing. The market is performing good. Dollar had weakened, and rupee had become weaker. Dollar had gained actually for the spike up, so it is gone weak. Crude oil is falling for some reason. It's at 72 now. It was trying to move up towards the top of the channel, but fell in the midway. And the gold is also falling from the top after making all-time highs several weeks before. But it's not breaking the neckline, and it's a little hesitant to fall further down. It's consolidating at the top, you can say. Crude is consolidating at the bottom. So what has happened today is a dip. So every dips like this, investment opportunities for quality stocks in SIP mode. So traders, direction is clear, that's sideways more or less in the short term on both indices. Apply strategies accordingly. Only if the price moves over the analysis indicates that it's bullish, that's when you are going for option buying strategies. So selling range bound spreads, non-directional, that could work to some extent. And the moment it turns bearish with big back down below the RSI 40, that's the time you have to stop from directional downside strategies, and then that's where we have to basically focus on the directional expansion downside. So as long as it is no direction on the upside or downside, going for strategies that's in the sideways. The market is that, and indices are showing that. Right. Tomorrow we have a film expiry, the 19,700 and 21,000 is where the PCR is showing. It's bearish put call ratio. 19,700 and 21,000 is where the highest put and call writing is there in the option expiry. So it's bearish all futures. Build up is also short build up, so all expire. So film expiry follows the bank Nifty. Bank Nifty is weak, and so it's bearish. But if you want to take directional trades tomorrow from expiry, take it for next week, not this week's. We may have some premiums left and it will be safe. Direction, a breach of the RSI, you have to take the call. Right, the moment it dips into the zones, right, then get a confirmation and then you have to enter. Non-directional, these are range that you have to play with. And that's all I have. And if you're not subscribed and watching this, please subscribe and share to friends and colleagues. So it will help others to notice this and get to watch this as well. So play it safe and manage your risk is all that we can do. Right? Focus on that, and levels are there with you. Complete analysis there. That should be enough to get more clarity on what can happen. That would have given you some options to explore for a plan, solid plan before you sit down and trade for the next day. Right? Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.